Well, we have a long-standing relationship with Nigeria that dates back to the 1960s. And with regards to the Nigerian Stock Exchange, that started in 1986 when we started providing information on the Nigerian Stock Exchange. At the time, up until recently, we only provided end-of-day prices, which were essentially indicative of what the Nigerian market did, rather than what we've moved to, which is live real-time data feed that gives opportunity for Nigerians to be able to actively participate in trading the stocks that are listed on the Nigerian Stock Exchange. So the benefit for Nigeria is that they can expect liquidity to improve. They can also expect that there will be more disclosure and more information about the Nigerian Stock Exchange, which should give confidence in this current environment where we've had over the last 2 years, especially globally, with regards to the economic crisis. So more exposure, more visibility to the rest of the world in terms of Thomson Reuters clients that will have access to seeing the real-time data feed inside Nigeria to the point of view that they are able to actively participate and trade in the Nigerian economy, which is reflected by the Nigerian Stock Exchange.
Busisa, how exactly will investors gain out of this?
Well, we have a group of registered Nigerian stockbrokers that actively are trading right now. And those stockbrokers would be able to facilitate any trade by their clients. Within Nigeria, it's been a simple process, but for any global investor outside Nigeria, they would not have had those strong relationships. What the real-time data feed does is give access for Thomson Reuters clients to be able to see the trade inside Nigeria and actively participate via the stockbrokers that are registered with the Nigerian Stock Exchange. So liquidity is expected to grow, and as we understand, it is about risk, and risk is usually about the lack of information, with investors not having the confidence that they are aware of the happenings in a particular economy and country. So our increased coverage of the Nigerian Stock Exchange through the real-time data feed will open up Nigeria to the rest of the world, which it should benefit a great deal.
Busisa, how have market players in Nigeria reacted to this currently?
They've reacted very positively because over time, as the Nigerian Stock Exchange has moved to electronic trading, has firmed up the workflows in terms of custodians and commercial banks and security trading and settlement. So we have moved to good corporate governance, good practice in terms of practice that is aligned to how global investors are accustomed. So we've been well received in terms of that partnership, and all we've done is essentially celebrate another leapfrog in terms of our ability to facilitate the Nigerian economy and the investors across the world in participating in investing in stocks.
Well, take us through for the banking sector. How exactly is it going to make the banking sector more transparent in terms of their disclosures?
Well, not so much on the banking sector, but essentially any trade that happens across the world has to be settled in terms of the buyer being able to pay across to another bank. So the banks should be able to observe more visibility and more transactions that will happen. In the form of stocks, you will typically have two types of banks that will benefit. You will have the custodial bank, which tends to be independent of the settling bank, the commercial bank. And I would gather that both those will benefit. The reason why they are typically separate is to create the independence and be able to reconcile that things happen as they should, and you have the Chinese walls. So commercial banks that are custodians will benefit, and so will commercial banks that are doing the actual banking transfers.
Well, since you've started this in Nigeria, are you going into Kenya? Which other country are you going to go into for real-time data feed?
Well, we have already done the same for Kenya, and that was in 2008. We are looking at other parts of Africa, and those would include Ghana. They would include Ivory Coast as a representative of the 5 West African French-speaking countries. We would look at other countries such as Zambia, Uganda, and essentially open Africa to Africans to invest across the world. By example, South African retirement funds would allocate up to 5% of their asset value to investing in Africa. So they are looking for opportunities, and it is similar throughout Africa.